Hi, welcome to part 3 video for your FA1 chapter 5. And in this video, we are going to learn another concept called disposal of fixed asset. So what is disposal of fixed asset? When the old assets are no longer used or spoiled, the company may consider sell it. So when you sell your asset, we use the term called disposal. Company is required to compute the gain or loss arising from the disposal of fixed asset. And this is a guide to tell you that how to record when you have a disposal of asset. Step 1, you have to de-recognize the asset. So double entry, debit disposal account, credit asset account. It depends on which asset, for example, motor vehicles or office equipment. Next, reversal of accumulated depreciation. Here refer to all the accumulated depreciation for the disposed asset you have to reverse out from the company. Double entry, we debit the accumulated depreciation account and credit to disposal account. Step 3, recognize the collection from disposal. So when you sell the asset, confirm you can get something, right? You can either get bank, cash, or even trade-in. And then you credit the disposal account for recognizing the collection. And step 4, you calculate the gain or loss arising from the disposal. If the cost of the disposed asset is higher than your accumulated depreciation plus sale proceed, you make a loss. If the cost of disposed asset lesser than your accumulated depreciation plus sale proceed, you make a gain. So this one I will go through with you again later. So let's go to classroom exercise 5.4. The following is the extracted trial balance of LCT company as at 1st January 2016. So it says that this is office equipment. They have 2 units. The total cost is 45,000 and the total accumulated depreciation up to the 1st of January 2016 is 15,000. As at 30th June 2016, the company has disposed one of its office equipment. The cost on accumulated depreciation of the disposed asset as at 1st January 2016 is 25,000 and 10,000 respectively. The sale proceed of the office equipment is 3,000. The company used reducing balance method to account the depreciation at a rate of 20% per annum. Based on the above information, please prepare the following account as at 31st December 2016. Office equipment, accumulated depreciation, disposal account, and gain or loss on disposal account. So we are required to prepare these 4 accounts, and the financial period for the company is from 1st January to 31st December 2016. So let's analyze this. It says that inside this combination we have 2 assets, so we can do a working on it. So this is cost is 45,000 and this is accumulated depreciation, which is 15,000. So how many office equipment we have? We have 2 office equipment. So we know that how to split to office equipment 1 and office equipment 2. It says that on 30th June 2016, the company has disposed 1, right? The disposed asset cost is 25,000. We know that this asset is going to dispose. And for the accumulated depreciation, the one that we are going to dispose having a accumulated depreciation of 10,000. So this is the one that we want to dispose. So from this comparison, can you get the cost for office equipment 2 as well as the accumulated depreciation of office equipment 2? I think easy, right? 45,000 is the total cost. If the disposed asset is 25,000, so the remaining will be 20,000. How to get 20,000? we use 45 minus 25. For the accumulated depreciation, the disposed asset is having an accumulated depreciation of 10,000. So the remaining one is 5,000. How to get 5,000? We use 15 minus 10 to get 5,000. So this is the analysis. So when we prepare this, right, we have to calculate the depreciation of the asset. We have to calculate the depreciation of the asset. So this depreciation we will split into office equipment 1 and office equipment 2. Office equipment is used up to 30th June, right? So, and this company is using reducing balance method at a rate of 20%. So office equipment 1. So let us do some revision on the formula. The formula of reducing balance method, we use cost minus accumulated depreciation and multiply with the depreciation rate. Cost minus accumulated depreciation and multiply with depreciation rate. So for office equipment 1, the cost is 25,000. The accumulated depreciation is 10,000. The rate is 20%. And this asset we use up to 30th June only. So we need to draw a timeline. So assuming this is a timeline from 1st of January up to 31st December. The company used the asset up to 30th June. It means that the period that we use the asset is start from 1st of January up to 30th June. So the number of months, 6 months. So times 6 divided by 12. Answer 25,000 minus 10,000. We get 15 times 20% times 6 divided by 12. We get 1,005 depreciation for office equipment 1. For office equipment 2, the cost is 20,000. Depreciation, accumulated depreciation is 5,000. Rate is 20%. Because there is no indication to say that office equipment 2 is being sold during the year. So we assume it's fully using this year. So answer so 3,000. Total depreciation is 4,500. Total depreciation 4,500. So let's start. We first record the opening balances of your office equipment and also the accumulated depreciation opening balances. So this exercise is 2016. So 2016, 1st of January, we have a balance BD. Balance BD is 45,000. And then for your office equipment, the balance BD is on the credit side, 15,000. Next, we record the asset that being disposed. On the 2016, 30th of June, we sold one asset, right? So we record to disposal account. This is office equipment 1. the disposed asset is having a cost of 25,000, so we reverse 25,000. Credit asset account and debit goes to disposal account. So we write office equipment 1, 25,000. So this is the first double entry. We reverse the asset from the office equipment account first. Alright, disposal. Next, we adjust all the depreciation. We adjust all the depreciation for the disposed asset. Step 2, reversal of accumulated depreciation. So similarly, 2016 on 30th of June, we write disposal account. So we can just write disposal will do. Okay, we write disposal, and this disposal is related to office equipment 1. So what is the total accumulated depreciation for office equipment up to the date of disposal? The total depreciation will be up to 1st of January 10,000 and up to 30th June 1,500. So total is 11,500. Why 11,500? This 10,000 refer to the office equipment 1 accumulated depreciation up to 1st of January, and during the year 2016 we have used for 6 months, so we also need to account the depreciation for this 6 months. So in total, 10,000 plus 1,500, we get 11,500 for the office equipment 1 accumulated depreciation. Remember, if the asset still using during the year, we have to account the number of months that we're using. For example, this 6 months. So 11,500, and then we recognize this amount to disposal account. $11,500. And after you transfer the asset, right, we have to go back to step 3, recognize the collection from disposal. So how much we receive? The sale of the office equipment is 3,000. So we assume that this 3,000 is done by bank transfer. So we debit the bank account and credit goes to disposal account. So June 30th, we write bank 3,000. The next thing that we have to do is we have to analyze how much gain or loss arising from the disposal. So without looking at the theory, let's use some common sense here. This asset, office equipment 1, when we purchase, we spend 25,000. And we use up to 2016, June 30th, the accumulated depreciation is 11,500. We can say that this is the total benefit that we are using, the cost of using, and then we receive 3,000 from the sale of this office equipment. Spend 25,000 and only recover 14,500. So tell me, we make a gain on disposal or loss on disposal? The answer is we're making a loss on disposal. Why? Because the cost that we originally paid is more than the benefit that we use, is more than the amount that we use. So what is the different amount? The different amount is 10,500. So this is loss on disposal. So let's refer this back to the theory. If the cost of disposed asset is more than the accumulated depreciation plus sale proceed, the cost is more than 25,000. The cost is more than the accumulated depreciation plus sale proceed 14,500. So this is a loss on disposal, right? This is a loss on disposal. So you can try to use your common sense to analyze whether you make a gain or loss from the disposal. So this is 2016. So June 30th. We recognize this amount from disposal account. So 10,500. How I get this amount? I credit the disposal account and debit goes to gain or loss on disposal account. Next is year end. We do the closing. But before that, let's recognize what is the accumulated depreciation during the year. 31st December. Our depreciation is how much? Look at the working. The total depreciation is 4,500. So after you record the depreciation, we can do the closing of account. So for depreciation account, because the requirement is not require us to prepare, so we no need to show here. But you have to understand what is the double entry when we recognize the depreciation in our accumulated depreciation account. So let's do the closing. So this is December. Balance CD 20,000. And this amount we will bring to next financial year. And for accumulated depreciation account, similarly, we close at the lower side. The closing amount is 19,500. So the balance is 8,000. So we bring this amount to next year. $19,500. And then for disposal account, we have closed. Remember, for disposal account, you will not have any balance CD and BD. This amount will be fully closed. And for the gain or loss on disposal account, this account is expenses or income account, depending on whether you are on gain or loss. So this account we will transfer this amount to income statement, because this is either expenses or gain. So we write the wording income statement. So that's all for this exercise. So let us do some analysis to check whether our answer in ledger is correct. So we back to the analysis here. So we know that after we sold office equipment 1, in this company we still have what? We still have office equipment 2. And the cost of office equipment 2 is 20,000, right? You can check whether this amount appear in your office equipment ledger account. Yes, this amount appear in your office equipment ledger account. It means that your answer is correct. It means that at next year, 2017, 1st January, we have only one office equipment, and this is office equipment 2. the value is 20,000, which is showing here. And how about the accumulated depreciation? At the early of 2016, we have 5,000 as accumulated depreciation. This year charging of depreciation is 3,000. It means that the total accumulated depreciation for office equipment 2 is 5,000 plus 3,000, 8,000. So let's see, at the end of the financial year, do we have 8,000 in our accumulated depreciation account? Yes. At the end of the year, our accumulated depreciation is 8,000, and this 8,000 will bring to next financial year. Sorry, this should be 8,000. Alright, at the end of the year, we have accumulated depreciation of 8,000, and this all belongs to office equipment 2 because we still have one office equipment only, which is office equipment 2. And this amount will bring to next financial year. And when you dispose asset, you have to do this analysis. Either you make a gain or make a loss. So in this example, we make a loss because the cost is more than your accumulated depreciation plus the collection, 3,000. So we make a loss of 10,500. So that's all for classroom exercise 5.4. So in the next video, I'm going to show you what is the accounting treatment when the asset is written off. So thanks for watching. I will see you later.